We've also got Jameel Ahmad, who is Global Head of Currency Strategy at FXTM, joining us on the line. Jameel, thank you so much for your time as well this morning. We seem to be doing this to ourselves, however, seeing the weakness in South Africa's currency.
Thank you very much. So yes, obviously yesterday was quite an interesting day for the South African rand, because initially it did appear that this news regarding the finance minister did lead to the rand falling about 1%. This was in the early hours of Monday trade, but then the rand recovered. I don't think the political risk that might be possible for South Africa now is the same as what happened in March 2017, because that led to a dismissal of a very popular finance minister who was very respected, and it was part of a wider cabinet reshuffle. But I would monitor what could happen domestically. However, on the global scale, there's big concerns for emerging markets, because the Chinese yuan has now dipped to its lowest level in around 19 months. And there was a huge sell-off in China stocks yesterday. It was a little bit overdone because China markets were closed last week due to the week-long holiday. However, it has added to a negative atmosphere for the new trading week.
Yeah. How long do you think this remains?
Well, there's so many unknowns that do remain over trade uncertainties that nobody can really say how long this is going to prolong for. I do think that the China sell-off last week was overdone, because you had to take into account that there was a public holiday in China last week, which meant that the Chinese markets were closed. And essentially what happened yesterday morning, although these were very significant sell-offs, nearly 4% in the Shanghai Composite Index, it was also a case of the market trying to play catch-up to what happened last week, which was a negative week for global stocks, basically. But we do see more concerns from the IMF this morning when it comes to global trade tensions. They've cut the forecast for global growth, so this is a concern for the global economy. How long it can continue for actually depends on what the outcome is from this trade dispute.
Yeah. Jameel, we seem to have, there used to be a whole synchronized growth discussion that happened across the world. That's completely faded and completely gone now, isn't it?
It's correct to say that this growth story isn't as synchronized as it would have been in the past. You're seeing it looks like it's somewhat of a turnaround, where if we go back 10 years ago at the United States, well, before the financial crisis, the U.S. economy was performing very well. 10 years later, the U.S. economy has very much recovered. It's fired on all cylinders, mostly when it comes to economic data in the U.S., which is causing a lot of turbulence in financial markets, because we're not quite seeing those consistent signs of growth in some of the emerging markets. They're dipping lower. South Africa is one of them, but then the European economy isn't showing real optimistic signs that it's turning the corner consistently. There's so many uncertainties around Brexit, the United Kingdom, and nobody really knows what's going to happen there. And then on top of this, you've got the dollar's very strong, and the US economy is the only one that's leading the way right now, and everybody's quite significantly behind when it comes to US economic momentum. And that's without commenting on US interest rate policy, because the Federal Reserve are very optimistic, but the ECB, Bank of England, Bank of Japan are nowhere near the same table as the Federal Reserve.
Yeah. Well, Jameel, thank you so much for your time this morning. Jameel Ahmad is Global Head of Currency Strategy at FXTM.